Good day, Junior Tickies. I'm Mrs. Brimacombe. We're going to look at activity 4. In this activity, we're going to look at the first time where there's opening balances involved. So before we start with the activity, we're going to go through, but what are the steps in completing the general ledger? So the first step is opening balances and totals at the beginning of the month. Step number 2, post from the cash receipts journal and the cash payment journal. And then the last step, once we've done the posting, we need to close off all the accounts in the balance sheet account section and in the nominal account section. So when we now zoom into specifically closing off the accounts at the end of the month, step 1, determine the greatest side. In other words, is the debit side more than the credit side, yes or no? Step number 2, determine by how much it is greater. The third step, write the amount by which it is greater on the smaller side as balance carried down or total carried down on the last day of the month. When we're looking at the balance sheet account section, we always look at balances. When we look at the nominal account section, totals. Please make sure that you study that. Step number 4, total the debit side and the credit side on the same line. The amounts must be the same. And then step number 5, bring down the balance on the bigger side on the first day of the next month as balance brought down or total brought forward. So these are the steps that we need to follow when we're closing and balancing off the balance sheet account section and the nominal account section. So now we're going to start with this activity, activity 4. There are different ways to approach it. I'm going to focus on opening balances, posting from the journal, and then closing off the accounts. We're first going to look at the CRJ and then we're going to move on to the CPJ. When we've done chapter 1, accounting theory, we said to you, date, click. D for debit, E for expenses, A for assets, D for drawings, C for credit, L liabilities, I for income, C for capital. So these accounts will always increase on the debit side and those accounts will always increase on the credit side. My income will always have a positive effect on the owner's equity if it increases. If it decreases, it will have a negative effect. My expenses will have a positive effect. My expenses, if it decreases, it will have a positive effect. When it increases, it will have a negative effect. So this is important to take note of because now I can simply classify each one of these accounts, which I've done, which you've learned in chapter 1. And now where the plus is where the opening balance will appear. And that's why it is so important for you to understand classifications of accounts. So we start off now from the cash receipts journal. And the first step is opening balances. Account number B1, capital, it's owner's equity. Where's the plus? On the credit side, which means on the credit side, we will have balance brought down 100,000. Now, step number 2, posting from the journal on the day on which the transaction took place. From the cash receipts journal, bank is debited, the rest is credited. On the credit side, I'm going to have on day 1, so I don't need to write the date again. Details, bank, from the cash receipts journal, 240,000. Indicate that you've taken this to account number B1. There were no other capital contributions. That's why at the end of the month, which is the last step, there's nothing on the debit side. We can simply draw a line on the credit side and we can total. This is our new capital balance 340,000. So step number 1, opening balance. Step number 2, posting from the journal. Step number 3, close off the account at the end of the month. Next, we've got bank. So if I have a look at bank, it specifically says debit. Debit means it's regarded as a current asset. On the debit side, we're going to have March 1st, balance brought down for 24,800. From the cash receipts journal, bank is going to be debited on the last day of the month, total receipts, and the amount 301,615. I'm not going to close off the account yet because I know from the CPJ, bank would have been credited. Then we've got fee income in the nominal account section. Fee income is regarded as an income. So where's the plus on the credit side? So the total brought forward on the first day of the month, 166,350. Step number 2, from the cash receipts journal, our fee income 49,320 must be taken to the credit side of the general ledger account. From which journal? From the cash receipts journal, my details, bank. That is the contra account. And we indicate that we've posted it to account number N1. There's no other figures to be taken to the fee income, which means at the end of the month, we can total this by drawing a line and adding those two figures together. This is my new total in the new month. Rent income is regarded as an income, so my total brought forward will appear on the credit side on the first day of the month. And second step, posting from the cash receipts journal, rent income. Now we have to post it on the day of the transaction, which is the 15th, 4,000. End of the month, we can total that by adding those two together. Commission income is regarded as an income, which means on the credit side, on the first day of the month, we're going to have total brought forward 7,000. Step number 2, posting from the journal. From the cash receipts journal, bank is debited, the rest is credited. On the day of the transaction, which is on the 27th, on the credit side, we're going to have 8,170. Now you would notice I've not posted interest on current account yet. Just because there is no opening balance for interest on current account doesn't mean that we're not going to post it. So from the cash receipts journal, we're going to indicate on the credit side that the business received 125 Rand because of interest on the current account. On which day? On day 25. And we're going to indicate that we've taken this to account number N12 in the nominal account section. Now, if I look at the cash receipts journal, we have posted everything to the general ledger. We can now move on to the general ledger. Posting from the CPJ. The first account is drawings, which is account number B2. Drawings is regarded as owner's equity. It will decrease my owner's equity. But always remember, if you look at drawings, it will increase on the debit side, decrease on the credit side. If it increases on the debit side, it will have a negative effect on your owner's equity. So when we write the opening balance, think about it as well. D4, debit. We are going to have on the debit side, on the first day of the month, balance brought down 15,000. Step number 2, post from the CPJ, On the day of the transaction, why? Because it's under sundry accounts. On the 25th, the contra account is Bank CPJ 700. Indicate that you've taken into account number B2. There were no other drawings, which means now we can simply add the debit side. There's nothing on the credit side, so I don't need to balance it by totaling the debit and then totaling the credit side and finding the difference. We can simply add the debit side, and that will be our new balance in the next month, which will be April. Vehicles is regarded as a non-current asset, so the plus is on the debit side, which means that the balance brought down appears on the debit side. This is step number 1, opening balances. Step number 2, posting from the CPJ. And from the CPJ, you could see that there were no vehicles purchased during the month, which means that we leave it as it is. Equipment. We start with step number 1, opening balance. It's a non-current asset, which means the plus is on the debit side, which means the opening balance will appear on the debit side. Balance brought down 80,000. Step number 2, post from the CPJ. There are no money column open for equipment, which means we need to check the details under sundry accounts. On 2 occasions, there were equipment which was purchased. We need to show it separately. So our assets is going to increase on day 4 and then on day 18. From which journal? From the CPJ. What is the contra account? Bank. There were no other transactions with regards to equipment, which means at the end of the month, we can now total it. This is my new balance going into the next month. Bank had a debit balance. We started with the balance brought down on the debit side, which means it's regarded as a current asset. From the cash receipts journal, we have posted what was our total receipts. From the cash payment journal, our total payments at the end of the month was 61,638. So now I've got something on the debit and on the credit side, which means that we need to balance this account. We need to find out what is our new balance going into the next month. So to find this out, we need to look at which side is the greater side. So it's clear that the debit side is more than the credit side. So to balance this, we're going to add the debit side, which should equal the credit side. And the difference is my balance carried down, means the following month, in April, my balance brought down. Again, we start with step number 1, the opening balance. Step number 2, posting from the cash receipts journal and the cash payment journal. Last step, calculate your new balance for the next month, which is April. Next, cash float. Cash float is regarded as a current asset. On the debit side, we're going to have the balance brought down 3,500. Step number 2, post from the CPJ. On day 7, the business put money into the cash float, total 2,000. There were no other transactions, which means the last step, close off the accounts. We're going to total it, and the amount, my new balance is 5,500. Then we've got petty cash. Petty cash is also regarded as a current asset. On the debit side, balance brought down 800. Step number 2, posting from the CPJ. Bank is credited, the rest is debited. On the day of the transaction, which took place on the 7th, we're going to have the contra account bank from the CPJ, the amount 500, and indicate that you've taken into account number B7. Last step, total, close off the account. There's nothing on the credit side, so we're going to add everything on the debit side. We have covered all our owner's equity assets. There were no liabilities. So now we move on to the nominal account section, looking at all our income and expenses. So the next account that we've got is wages. Step number 1, write down the total brought forward. Please remember, balance sheet account section, balances. Nominal account section, total. It's an expense. On the debit side, it will increase. That's why the total brought forward will appear on the debit side. Step number 2, posting from the journal on the last day of the month. Our total wages, we're not going to post it individually. At the end of the month, our total wages was 29,365. From which journal? From the CPJ, and the contra account is bank. Indicate that you've taken this to account number N4. Then we've got last step to close off the account. There's nothing on the credit side, so we just draw a line and we add all of that together. This will be our new total going into the next month. Consumable stores is regarded as an expense. Total brought forward on the debit side. There was a money column open for consumable stores, which means the total on the last day of the month will be posted to the debit side of the consumable stores account. Please take note also of the following. A common mistake is we say consumable stores and we write the details consumable stores. When we write the details inside of this account, what was the contra account? That is what you need to write down. So money came off our bank account. Why? Because we purchased consumable stores. There were no other consumable stores. At the end of the month, we can total that. That will be our new total moving into the next month. Repairs is regarded as an expense. On the debit side, we will have the total brought forward. Step number 2, from the CPJ on day 21, we will post that to the debit side of the repairs account and the amount 850. Our new total, the last step, at the end of the month, we have to add those two together. 1,450 is my new total going into the next month. Bank charges is regarded as an expense. On the debit side, on the first day of the month, total brought forward 800. Step number 2, from the CPJ, bank is credited. Bank charges will be debited on the day of the transaction, which is on the 25th. Last step, at the end of the month, total. So take 800 plus 398 equals 1,198, which is my new total. Telephone is regarded as an expense. Total brought forward will appear on the debit side, 5,100. Step number 2, posting from the cash payment journal on the debit side on the day of the transaction, which is on the 25th. We're going to have details, bank, folio, CPJ, amount 2,800. End of the month, which is the last step, close off the account by totaling it, the total 7,900. The same will be done with insurance. Insurance is an expense. On the debit side, total brought forward from the CPJ on day 25, 2,680. At the end of the month, my total is 14,680. Rates and taxes is an expense. On the debit side, total brought forward 6,700. From the CPJ, bank is credited, the rest is debited on the day of the transaction, which is the 30th, and the amount 1,300. At the end of the month, total. What is my total rate and taxes? 8,000. This will be your opening total in the new month. Water and electricity is an expense. On the debit side, total brought forward 9,800. From the CPJ, bank is credited, water and electricity debited on the day on which the transaction took place, which is the 30th. Details bank CPJ 3,400 and indicate that you've taken that to account number N11. Now you would notice there is no donations, but yet I've got a donation in my CPJ. Doesn't mean that I'm going to exclude that. I need to take it to the general ledger, which means this will now be my account number N13. On the debit side, on the day on which the transaction took place, which is the 30th, I'm going to have the contra account bank, from which journal, from the CPJ, amount 5,000, and I'm going to indicate that I've taken that to the account. Number N13 for nominal account section, and that is the number of the account. Now you would notice that everything has been taken to the general ledger. There's nothing left over. If we look at bank, wages, consumable stores, and everything there has a number next to it. It means that we've posted it. Before we close this activity, I want to end off by saying the following. Again, please make sure that you understand. When we look at the balance sheet account section, it's balances brought down, balances carried down. When we look at the nominal account section, it is total brought forward. You have to make sure that you get that correct. All debits must be equal to the credit side. If it's not the same, it means that you've made a mistake. From the CRJ, bank is debited, the rest is credited. From the CPJ, bank is credited and the rest is debited. If you get this right, the general ledger is not difficult. Thank you very much. The key to success is hard work and determination. Have a wonderful day.